Can you avoid these common investing mistakes? Warren Buffett. Warren Buffett is widely regarded as one of history's most successful investors. However, as Buffett readily admits, even the best investors make mistakes. Buffett's legendary annual letters to Berkshire Hathaway shareholders recount his most egregious investment blunders. Buffett's decades of investing experience have taught him a lot. Here's a look at 3 of Warren Buffett's biggest blunders. Make sure to watch the video till the end and subscribe for more. Here we begin. 1. Attempting to time the market. People who believe they can predict the short-term movement of the stock market or who listen to others who talk about timing the market are making a big mistake, Buffett says. 2. Attempting to imitate high-frequency traders. He believes that buying stock in a good company and holding it long-term is the better strategy than flipping stocks like a short-order cook flips pancakes. If they are actively trading, they are making a huge mistake, Buffett says. 3. Paying excessive fees and expenses. He sees no reason to pay a high management fee to invest in a mutual fund when super low-cost index funds that mimic large indexes such as the S&P 500 stock index are available. They are making a big mistake if they are incurring large expenses in connections with their investing, Buffett says. Buffett is famous for buying cheap stocks, solid businesses that makes a lot of money today and will make a lot of money tomorrow, and holding on to his investments for a long time to maximize profit potential. Some investment mistakes done by Buffett, Lubrizol and David Sokol. Mistake. Buffett Lubrizol Corporations was proposed as a potential takeover target by David Sokol, chairman of many of Berkshire's subsidiaries, but he did so while holding stock in Lubrizol Corporations, a chemical company. Mr. Sokol's failure to inform Buffett of his stock ownership violated Berkshire's insider trading policies, and while Berkshire acquired Lubrizol for approximately $9 billion, David Sokol profited from the transactions to the tune of $3 million. According to Berkshire's internal investigations, Sokol was purposefully fake about how he came to own the Lubrizol stock. For example, Sokol did not state that he purchased the shares only after meeting with the bankers who presented the acquisitions proposal. In Buffett's own words, it was a simple matter of ethics. Lesson: be cautious. Make a checklist, adhere to a procedure, and don't be afraid to ask more questions than you think are necessary. You must be careful when your reputation is at stake. Energy future holdings. Mistake. Buffett invested $2.1 billion in Energy Future Holdings Corporation bonds. Unfortunately, it also turned out to be an $873 million mistake. Buffett's purchase of their high-yielding bonds in 2007 was a bet on the rising price of natural gas. As a result, the coal industry will become more competitive and profitable. However, natural gas prices have fallen since 2007. As a result, it resulted in massive losses for Energy Future. In the end, the company declared bankruptcy in 2014. Berkshire sold the $2.1 billion bonds in 2013 for a loss of $873 million. Lesson: the first is the risk of predicting something, particularly the price of natural gas, oil, gold, or even a single stock. The second takeaway from Buffett's blunder is the value of investing in yielding junk bonds. Tesco. Mistake. Berkshire Hathaway owned more than 5% of the company by 2012, but by 2013 it was clear that something was wrong with Tesco, and Berkshire had reduced its stake to 3.7%, representing a nearly $1.7 billion investment. Tesco's shares price continued to fall over the next few months. It dropped nearly 50% due to declining sales and increased competitions from discount retailers. Buffett's blunder was delaying the sale of Tesco stock, and he did so despite having seen the warning signs. As a result of the delay, Berkshire suffered a loss of approximately $444 million. Lesson: as a result, the lesson here is that conviction is also essential for selling. Just as you wouldn't invest without conviction, you shouldn't hold onto a stock if you don't believe in it. Dexter Shoes. Mistake. Investing in a company with no long-term competitive advantage. Buffett purchased the shoe company Dexter Shoes in 1993. Unfortunately, Buffett's investment in Dexter Shoes was a flop because he saw a long-term competitive advantage in Dexter that quickly vanished. What I had assessed as a durable competitive advantage vanished within a few years, Buffett says. Buffett claims that this was his worst investment, resulting in a $3.5 billion loss to shareholders. Lesson: companies can only earn high profits if they have a sustainable competitive advantage over other companies in their industry. For example, Walmart has ridiculously low prices. Honda makes high-quality automobiles. These companies can maintain high profit margins as long as they can deliver on these things better than anyone else. If not, the high profits will attract a slew of competitors who will slowly eat away at the business and siphon off all the profits. US Air. Mistake: confusion between revenue growth and business success. Buffett purchased preferred stock in US Air in 1989, no doubt drawn by the company's high revenue growth up to that point. Unfortunately, Buffett's investment quickly turned sour, as US Air did not generate enough revenue to cover the dividends due to his stock. Buffett was later able to sell his shares at a profit thanks to good fortune. Despite this good fortune, Buffett recognizes that this investment return was guided by Lady Luck and the industry's optimism. Lesson: as Buffett pointed out in his 2007 letter to Berkshire shareholders, businesses may appear to be doing well in revenue growth. Still, they require significant capital investments all along the way to achieve this growth. For example, this is true for airlines requiring additional aircraft to increase revenue significantly. The problem with these capital-intensive business models is that they are heavily in debt by the time they achieve a large base of earnings. ConocoPhillips. Mistake: bought it at the wrong price. Buffett purchased a large stake in ConocoPhillips stock in 2008 as a bet on future energy prices. Many people believe that oil prices will rise in the long run and that ConocoPhillips will benefit as a result. However, this proved a bad investment because Buffett purchased it at an exorbitant price, resulting in a multi-billion-dollar loss for Berkshire Hathaway. The price at which you buy a stock is the difference between a great company and a great investment. This time, Buffett was even more wrong, because crude oil prices were well above $100 per barrel at the time. Oil company stocks were skyrocketing. Lesson: investors who can keep their emotions in check can conduct a more objective analysis. For example, a more objective investor might have recognized that crude oil prices have always been extremely volatile and that oil companies have long been subject to boom and bust cycles. Let us know your views and subscribe for more.